Subscribe to our channel and click on the bell button to receive important financial updates faster than anybody else. Welcome to another video on your channel Profit and Equities. In this video, we'll be talking about an asset management company which has the potential to be a multi-bagger from here on. Now, this company has been a recent underperformer. However, this was primarily due to the issues with the promoter group companies. However, the promoter has now announced that it will be selling its stake in the future, and this news should be enough to trigger a positive movement in the stock. Now friends, if you have not already become members on our channel, please click on the blue join button and follow the steps to do so. This entitles you to member only privileges on Profit and Equities. Also, if you have not already subscribed to our channel, please click on the red subscribe button below. This will help you get notified whenever we upload a new video. Please watch this video to know more. Now the company in question is Reliance Nippon Life Asset Management, which is available at Rs 193.05 and the face value for it is 10. The symbol for it is RNAM. Now Reliance Nippon Life Asset Management Limited, formerly Reliance Capital Asset Management Limited, is an asset management company. The company is the asset manager of Reliance Mutual Fund. The company has its business in asset management, life insurance, general insurance, private equity, stock broking, and other activities in the financial services sector. Now, FY19 earnings for this stock looked off color. Any progress in the stake sale as announced by the ADAG group will be the foremost driver of the stock. With mutual fund assets of Rs 2.33 lakh crores as of March end, Reliance Nippon is the fifth largest asset management company in the country. While its overall asset under management growth moderated in FY19, the finer details of the business are very encouraging. For instance, RNAM is the industry leader in retail assets. The latter forms 39% of its average AUM, much better than the industry's retail AUM of 26%. This is positive as retail flows typically consist of high earning equity assets and are relatively sticky than institutional flows. Despite reporting such healthy trends in asset flows, the stock of RNAM has remained under pressure. The financial problems of the Reliance ADAG group, of which the company is a part of, has hurt the stock. Even though Nippon Life is an equal partner with 42.88% stake in the AMC, Reliance ADAG's stake has been a key overhang for the stock. According to a stock exchange release earlier this year, the parent Reliance Capital was looking to sell its stake in the AMC and invited the co-promoter Nippon Life Insurance to buy up to 42.88% of its stake in the AMC. Considering the mounting financial problems of the ADAG group, stake sale in RNAM looks imminent, especially after the recent rating downgrade of ADAG's group lending businesses. This includes Reliance Home Finance and Reliance Commercial. Investors can expect an announcement of the same in the coming months. The management has indicated 6 weeks during its analyst call, and this would be a very positive outcome. Now, Reliance ADAG Group's decision to reduce its stake in the business will help assuage investor concerns and can trigger an open offer benefiting minority shareholders. That said, RNAM's exposure to group companies still remains a key risk factor. At the current market price of Rs 193, RNAM is trading at 5.2% of the average mutual fund AUM of Rs 2,33,600 crores as of March end. The stock is trading at 23 times FY20 estimated price to earnings. Valuations are reasonable considering its return on equity of close to 19.7%, its strong retail brand, improving asset mix, and well-diversified sourcing platform. Also, the company appears to be cheaper than its peers and also has a very strong dividend yield of 3.11%. Also, the promoter holding, the sale of half of which appears imminent, is also pretty strong. Also, none of the promoters holding is pledged. The company is also debt-free, and this is another positive factor for the stock. Now friends, please don't consider this to be a recommendation on our part. Please go ahead and do your own research. This and all of the content that you see on our channel is intended to be a piece of news. Now friends, a disclaimer on our part, this is not our own research. This was carried out on a financial news website, and we'll be providing a link to the source for this video in the description section. Please go through it to build more conviction around your investment decision. Thanks for watching, and if you have not already subscribed to our channel, please consider doing so.